Hello, everyone, and welcome to this week's episode of the Security Token Show. My name is Kyle Sonlin, and on behalf of STM, we welcome you to another amazing episode. This is episode 285 of the Security Token Show. And folks, I've got a real treat for you. We have a few amazing guests for market movements, but of course, we are not having Herwig here on the show. As you can see, if you're live on YouTube, it is me as the singular host this week, which I don't think we've had for at least a year or two. So this is a great way for us to get to know each other just a little bit more. But we have an amazing market movement segment with a couple great guests. Then I'll be riffing through the Token Debrief and, of course, one company of the week this week. So pressure's on. Maybe I can't call in Herwig and see what his winner is despite everything going on. So I can't wait to dive into the show this week. If you're on YouTube, check us out. You can see me on video. We also do the live streaming thing through LinkedIn and through X. So there's all kinds of ways to catch this thing live in video, but we also have it on Spotify, Apple Music for those audio listeners. If you could like, subscribe, share this, that would be fantastic. Or if you are a token issuer, you're a blockchain enthusiast, you have cool companies or CEOs, investors that want to come on the show, definitely make sure to reach out to me at Kyle Sonlin or to the STM guys to bring that guest onto the show. We always love to hear from people killing it in the ecosystem. So with that, I want to roll right in to the market movements. All right. Well, to kick off the market movement segment, we have Marcus Martin and Adrian Alvarez. Gentlemen, how are we doing today? Marcus, what's going on?
Doing great, Kyle. I appreciate you guys bringing me on. Love the show and love to get on here and riff a little bit with you. So I'm doing great. It's a Friday, a lot of news, a lot of good stuff going on, a lot of momentum.
That's right. That's right. Adrian, friend of the show, friend of the company. What's going on, brother?
Man, been a long time since I should have been on this show, and I'm very happy to be on for the first time. Even though it's about to be your 6th year in a row doing this thing. Man.
6th year in about 3 weeks. Can you believe that?
Unbelievable how things are going. But yeah, it's a crazy time to be alive in the security token market, my friend.
Yeah, our first episode before we dive into the movements actually was Herwig and I calling for public feedback on our submission document to the SEC to increase the crowdfunding regulations in their open feedback period. And we were so jazzed because about a year later, we were actually credited for the increase in the Reg CF crowdfunding exemption from 1.07 to 5 million. So our first episode was actually talking about their open feedback period and how far we've come. Now the SEC and the president are hosting crypto dinners at the White House. Never saw that one coming when we did our very wholesome.
Maybe next year they'll do an RWA dinner, and you guys will.
Yeah. I think we've got some interesting stuff. And to start with that, Adrian, there is one really impactful company that has been leading this charge, and that's Robinhood. Robinhood, obviously, one of the leaders in stock trading. It's kind of the millennial Gen Z preferred venue to trade, on the mobile app, and they pioneered free trading and commission-free trading. They actually did just release an SEC submission. It was a 9-page letter detailing how they think the regulators can make it a little bit easier or remove some of the friction points for tokenizing real-world assets. The CEO, Vlad Tenev, has been very crypto-focused. They now offer all kinds of crypto trading. They also do stocks. It seems like a very natural fit. They're one of the largest, real brokerage firms with serious volume that has been diving into the crypto and certainly the RWA tokenization space. They just submitted a lot of these documents. Wanted to hear everybody's thoughts. Adrian, you as our expert legal perspective here on the show, if you want to lead it off, what are your thoughts around them submitting this document, either based on what they think or what this could mean and how impactful this actually is in this with the jurisdictions?
The road to tokenized stocks is finally opening up. I think, honestly, Kyle, I think the biggest difference this cycle versus the last one is there are now big enough firms within crypto to have their own lobbyists, to have their own people out there pushing Congress people, making donations. I mean, we saw how impactful that was in the political sphere coming up, how it was an opportunity for either party to kind of embrace crypto, and Trump took it and Trump won. And that has basically shown Washington and the powers that be that crypto's here, crypto has money, and crypto's influence isn't going anywhere. The younger generation, the next generation, like the gamified aspect of it. I don't see any Gen Z guys getting a Charles Schwab account. You know what I mean? It's one of those things where it's going to happen. It's a matter of when, not if. And this is just part of that inexorable path towards it. I think Robinhood is one of the big players just because they went public at the right time. Them and Coinbase, they got in at that last cycle, and now they're using that influence towards making it happen. So I think I'm excited. I think that we got the big guns on our end this time around, and now it's not a joke anymore. Right. That's the key part.
Marcus, any thoughts there?
No, I think Adrian's 100% right. I mean, we also have the data now. Adrian mentioned, right, you've got the Krakens, the Coinbases of the world who got in during the last cycle. They've built some pretty strong businesses. They've professionalized the industry in a lot of ways. And, just being an OG kind of combination of the TradFi meets, DeFi world over the last decade or so, it's really to the benefit, right, for the regulators to now see the data and to understand really where we're all coming from and why this is so important. And not to mention the fact that, we actually need to think about the innovation and staying ahead of the rest of the world. And we're in a perfect position to do so. So I think this is all the better, and hopefully we can see even more progress in 2025 with this thing over the finish line and start tokenizing everything.
Totally agree. I want to keep that momentum. You mentioned Kraken. We just saw Kraken announced a partnership with MPact, a company that we've covered here on the show many times that has been focused on tokenizing U.S. equities. And Kraken, one of the largest crypto exchanges in the world, I would certainly say that they're in the top 10, if not higher. The only reason I can't say specifically is there are a few Asian exchanges that you may not have necessarily heard of. They're household names in the West that have enormous volumes. Yeah. But Kraken is certainly one of the largest Western-based firms. And so they just announced that they are going to be hosting these tokenized stocks. Now, it is only for non-U.S. investors at this point, and they are MPact is the issuer. They have their new X stocks product, which I'm psyched for them. I don't totally love the X stocks name. There's just a lot of X's in the world these days. But X stocks is going to be their protocol, and they're trying to bring what they say is 50 plus stocks into the Kraken ecosystem. This does seem like they are breaking down more of these walls by just doing it themselves. Kraken has been known for, being a bit rebellious with respect to some of these things versus their Coinbase counterpart that's been a little bit more by the book. And so it does make sense that Kraken takes the first stab here. We know Coinbase has been looking at this through their own base blockchain, maybe bringing Coinbase stock on there. They also had the broker-dealer ATS that or I don't think it's active right now, but they did make that acquisition of Keystone. So they've sniffed around here. Gemini has sniffed around here, we know. So there's a lot of these exchanges. What do you think is going to be that tipping point, Marcus, excuse me.
No problem, Kyle. The tipping point's the demand, right? And I think it's great to see Kraken continue to push the envelope. They're always really out front, but they do it, as I mentioned, professionally. They obviously have all the infrastructure in place. They have their own, resources really to push the envelope. And so, anytime you see some of the world's leading exchanges and players in the space really pushing the envelope to drive more RWA and to really, again, prove out the thesis that we've all been a part of for years now, but we understand that it is the tipping point. It's the moment. And as we get more and more Krakens of the world looking to move traditional finance and especially the instruments we've all invested in on chain, the benefits for the world will continue to be displayed. So, I think it's a great move. And again, Kraken likes to push the envelope, and so kudos to those guys.
Absolutely agree, Adrian. Any other thoughts there?
The Kraken has been released on Solana.
You were waiting for that one, huh?
I had. It's been waiting there, man. No, I think it's, again, kind of that inexorable march towards tokenization. This is just another one of the steps towards it. Kraken's been one of the biggest firms from the start. And I think from a legal perspective, a lot of times firms move and experiment more in less regulated spaces. Typically, if you're a U.S. company, when you deal with non-U.S. investors, the SEC doesn't really do much with you or doesn't really care as much. So you see a lot more experimentation, a lot more play around. I think this is part of that. They're kind of trying this out on the world market, making sure that the product works well for people in terms of the tokenized stock so that eventually they can move towards the U.S. market.
The question I have for you, and I guess either one of you can answer, but is just like, okay, I've been the biggest proponent of tokenized stocks for a long time. We were covering, when FTX was doing it, we didn't quite know that it was a fraud. I was the one that was tracking all of that data by hand. I was the one that was reporting it here on the show, who was leading in volumes, what was going on. I was psyched about it, but we were also calling them out because we couldn't figure out, are these advanced depository receipts? Do they actually custody these assets? Who's the custodian here? How are we handling this, right? I was kind of leading that charge because I was fascinated by this market. Not necessarily saying I'm the saw what came, but I was just interested, right? And so I'm still interested. That being said, I want to maybe play the devil's advocate here. I'm pretty sure a lot of markets already are able to get exposure to these types of assets. And I think we've covered this on the show before. I've also had conversations privately about, a firm in England or a firm in the EU, or perhaps in one of the more, established markets in Asia. They can already get access to a lot of U.S. public equities at this point. That was kind of a lower hanging fruit for some of these brokerages or Robinhood or somebody like that. So does this really meaningfully drive adoption? Do we think that the crypto industry, is there a lot of, retail, maybe investors in, more satellite jurisdictions that still have a lot of purchasing power? Do we think this is really the straw that breaks the camel's back? Or is this kind of the dipping the toe in kind of a thing? Once they get familiar with a regulatory compliance structure, maybe then they'll be more excited to get into the slightly more exotic, or I think the more interesting types of asset classes. What are your guys' thoughts there?
I guess for me, it's just they're trying to establish a foothold. And I think it may end up being more of a defensive measure against other people doing tokenized stocks, so that they basically are one of the market leaders and are kind of poised to switch over once the U.S. allows it. Because I think that's what everybody's kind of waiting on, is the regulatory process in the U.S. and how people see crypto has completely flipped. And now we're just kind of waiting for that actual regulation, the actual laws to come through. So I think they're just kind of getting kind of almost like practicing with non-US, getting their tech together, kind of understanding the nature of what it is to tokenize a stock and gain more market share on the retail side, the people that don't have brokerages or on the lower end, but then getting poised for the US launch.
Yeah, crawl, walk, run, right? I mean, that's what we're seeing. And Adrian being the lawyer and the smarter one on the show, I'm just going to constantly defer to him, but I couldn't agree more. I mean, you got to crawl before you walk, and then you start running. And I think that's what we're seeing. So, it's all good.
And moving on to our next article, it actually does feature, Marcus, your business, MPact. Could you talk a little bit about the news with your launching the RIA for digital assets and RWA? I know that the RIA industry is actually where a lot of demand is these days. That's where some of the competitive juice is in managing a big book of clients and helping distribute passive index funds and work with advisors is on the rise as people kind of want broad market exposure as opposed to kind of being bespoke in their portfolio constructions. Can you talk a little bit more about the reasoning behind this decision, as well as what you think is coming up through the pipeline?
Yeah, no, I appreciate you guys featuring us on that part. Our team, we decided that we would move in this direction, launch the buy-side operation, start supporting a lot of advisory for those who are looking to tokenize assets. Our background, the collective team, really is in the combination of really digital assets generally, but on the TradFi side. our core founders all left US Bank together, where we were working on tokenizing assets in general. We issued the first tokenized or digital bond. We spent a lot of time on the custody side, a lot of time working through all the ins and outs of traditional finance infrastructure. And it just made sense. I think the reason why it made sense for us to launch the RIA, we all know how much of the world's wealth is in the US. We know that most of that, the supermajority, is sitting in RIAs. And RIAs are expected to really operate on behalf of clients, right, and provide them the best services. So it's really difficult if you're starting to look at the world in a tokenized manner versus the traditional finance manner, all the fees and everything we know that exists in TradFi management of assets. You're just giving your clients a better service. Now, when we think about the impact side of it, M really is for mutualism and PACT is our pact, right? So our investment management agreements focus on a couple key elements of sort of the impact investment universe. And really what we're trying to do is, again, bring all of those benefits of what you would normally see in sort of a structured, safe, stable, segregated, managed account practice, but on chain. And we specifically focus on the ownership economy. So we always talk about, data science for the good. And again, in the old world where we were doing the ESG impact and digital innovation stuff at US Bank, and before that in other places, other large banks and other institutions, we saw the need because a lot of the clients we focus on, be them municipal clients, housing finance authorities, large scale institutions, family offices, there's still the desire to see impact, right? There's still the desire to drive more of the ownership economy. We spend a lot of our time particularly around home ownership. So we actually have this really unique product called Homium, and it's a fair shared appreciation mortgage. You may have spoken about them in the past. I know I've heard them sort of floating around in the ecosystem, and I am the CEO of Homium as well, which is pretty cool. So we're able to combine the two, but Homium tokenizes all these shared appreciation mortgages on Avalanche chain. And so we're thinking to ourselves, well, if we're going to take this really unique private credit tool, which really helps drive ownership, it also can help unlock small business lending. Why would you then combine that with a traditional finance, investment scheme called credit fixed income? You might as well do that in a fully digitally native infrastructure. So we started building on that last fall. We're excited to have been approved by the SEC to go live. We've got several clients that we're bringing in the next quarter or two. And all of these portfolios, again, will be digitally native. So yeah, it's exciting. But in the same token, we're doing it because we understand the benefits. We also understand the benefits of immuting all this impact data on chain, right? You've heard of greenwashing and all this other stuff, but if you can actually bring that impact data together with the financial data, it's going to provide a powerful, set of tools, not only for the client and their investment strategies, but for our operations and for, of course, the reporting and all the great impact that the work can do. So, to us, it felt like a natural progression. I think you're seeing a lot of folks, Kyle, you've got a great buy-side operation as well. And really, we're filling the gap for where we know the demand is. And a lot of these clients are not necessarily focused on the tokenization effort. They recognize the benefits we can bring them and our expertise and experience sort of combining both worlds. And so we're excited to be a trusted partner and a advisor to manage assets for a number of clients. We look forward to sharing more as the news comes out on some of the stuff we're doing.
Congratulations on that. The one final question I have before we keep the show moving is just around the types of people that you're looking to connect with. We do have, I think, a high quality listener base of people that are very active in this industry. So in terms of looking for clients on the buy side or types of products that you may be looking to evaluate for diligence on the sell side, what are you looking for? What types of people that might be listening right now would be good ones to reach out to you, Marcus?
Yeah, thanks, Kyle. So, from an investor perspective, really any institutional investor, including some of the world's largest RIA platforms now that are moving towards, a digital asset ecosystem, we think we could be a great partner. We've been speaking to a good number of them. And in fact, in some instances, we'll have some announcements on some partnerships and investments. We're kind of a two-way street, right, where we're building this impact strategy, and we're focused purely on impact and particularly community outcomes. So we can bring you sort of financial returns as well as, really important impacts in the ownership economy. So anyone really who's looking into that space, especially as impact investing continues to grow, we think we can be a great partner. And then on the product side, as I mentioned, Homium is a critical component to our core housing infrastructure fund. And then we're thinking about, expanding our products into areas like tokenized carbon credits and looking at other ways to really reflect the impact universe on chain so that we can immute all that data. We can help bring more transparency, right, to the world of impact and combine the two. You don't really have to trade off returns for impact. And I think that's one of the cool opportunities that we'll have going forward. So really anybody that's interested.
I definitely think that's a big thing, not haircutting the returns for impact. I mean, obviously, I don't want to be, a pure capitalist here. Obviously, I think doing good for the sake of doing good is a wonderful thing. But charity is charity, and investing is investing, right? And so, making sure that you can do good while still trying to maximize your fiduciary duty and shareholder returns, I think is a great priority.
I couldn't agree more. I mean, that's again the center of what we're doing is bringing you market-based solutions, right, that have a genuine impact, but also provide a genuine return. And that really is the combination of what people call impact investing. So we're excited to be, possibly the first out there moving in this direction. And we know that a lot will follow. And we know that the RIA space is going to continue to get themselves smart and figure out ways to pass through better solutions to clients. So we're excited about being out there and being out front. Happy to speak to whoever is interested.
Well, really happy to have you here. I want to keep the show rolling. So I'll kick it over to Adrian for our next news headline. This is about Apollo. Apollo, one of the largest asset management firms, certainly from a private fund perspective. They are a leader in private credit, which is such a hot industry right now. But traditional private credit is, I don't want to say that it's a bubble, but it's very, I think, mature in the stage of the market that we're at right now. And so a lot of these funds are probably trying to figure out how can we either reduce our exposure or find new products to provide to, or potentially, if you can reduce the cost basis to increase the yield, you actually allow yourself to account for maybe some additional risk as the market matures because you're reducing your cost basis. And so it makes total sense why Apollo would want to get involved here. They just announced that they are working with a few different companies to do that. Camino Finance and Steakhouse Financial are actually, I believe, the DeFi style of issuers behind this product, Securitized being the fund admin and distribution platform for this Accred token, which is a tokenized version of Apollo's private credit fund. Adrian, can you talk a little bit about your perspectives here on this industry? I know InvestReady works with a lot of private credit issuers. What does this look like? How has the industry grown? What are your thoughts?
For sure. Yeah. Private credit has been absolutely burning up the last few months. We've seen a lot of increase, at least in interest on our end for accredited investor products that are doing private credit, and this Securitize and Accred themselves showing up on Solana again. It's that inexorable roll towards tokenization and growing the sphere. I think Solana is very, very hot right now. I think this cycle, Solana seems to be the chain of most interest and a lot of movement, especially a little bit on the degen side, but that seems to always be par for the course for the most popular part of crypto for the cycle. But Solana wants to get serious, and I think this is a really great opportunity for them to start courting the traditional set of financiers that are starting to move on chain. So this is amazing win for Securitize. As usual, Securitize has been an incredible role for the last couple of years, ever since they started working with BlackRock directly, and this just continues the win streak for them.
And what's your take on Solana? You think that's a long-term solution for them, or are you bullish on Solana, or you think that that's more of a degen style of play?
The way I try not to be too judgy about the way things came about, because things like the biggest technologies are usually ushered in by the worst people, or at least by the worst. So you get VHS was porn, and you get the music sharing was Napster. You get a lot of the different vices drive the technology and who wins. Meme coin trading is probably that current one that's making it win, and the underlying tech. Like, look, Bitcoin and had the same problem with Mt. Gox when it started. It's just that the people move towards the cheapest thing and what they can use. That's how Solana kind of gained its process. But Solana, I think the biggest benefit for Solana in this cycle is that it's a U.S. company. I think having a U.S. backing for U.S. coins, that and like bit of nationalism in crypto for this cycle is going to give it a little bit of an edge over potentially ETH, or at least not necessarily ETH L2s that are US based, like maybe Base and Avalanche. But I think having an L1 that is US based that has this much popularity, they're very well positioned for the future.
Yeah, I mean, I'll add to that. I mean, from our end, as we look to see more assets that are investable, as we're building portfolios, anytime I see additional access to private credit is great. Right, we spend a lot of our time in the credit fixed income side of the world. We are looking at tokenized stocks, but it's more likely that we'll be spending more time populating client portfolios in the credit side. So we love seeing more access to private credit. We all know the benefits of tokenized private credit. I will say this, and I don't want to get myself in trouble with the Solana gang, but one of the things that we have to think about when we're managing third-party institutional client portfolios is some of the due diligence on the underlying protocol itself. Again, to Adrian's point, good to see some of the unsavory parts of the chain moving towards the Adult Swim section of the pool. But in the same token, still would love to see a little bit more stability on the chain. They did have some fits and starts early on. I don't like to ever think that I'm going to invest on a chain that had downtime. But again, great to see a U.S. company really making the right moves and into the right direction. And we'll be monitoring it. I mean, anything that Apollo puts on chain, we're interested in, and anything that securitizes backing, we think has value. So, it's to add a little bit without getting myself in trouble with the Solana crew. That's how we see it. So it's all good.
And I'm not saying the Solana crew are the worst people, by the way.
No, the use case. Good people. There's some good people. The use cases.
Yeah, they're great people. It's just,
we're all friends here. We're all friends here. It was my fault for asking an inciting question to my panelists. But moving on, we have the JP Morgan, Bank of America, Citi, Wells Fargo. This news percolated or circulated all across Twitter that these major U.S. banks are thinking about launching their own stablecoin together. There's a lot to unpack here, so I'm just going to kick it over to you guys. How about whoever wants to go first? What are your thoughts on this collection?
I would probably name it USD Zell. If I had, they're already using Zell for all the other stuff. It's basically Zell, right? I mean, that's right. I think the Zell came out of a bank consortium, similar thing. I think it's similar banks that are doing it. It'll end up being. This is again kind of similar to what I said earlier about the Kraken. I think this is a defensive move. I think this is them trying to basically they see the writing on the wall. And they're trying to protect themselves because at the end of the day, an account with money doesn't have to be in a bank anymore. You can have an account with a wallet with stable coins. You can even have yield-bearing stable coins for some people. So that provides a new level of competition that banks have not had probably ever. In terms of the monopoly they had in terms of being able to custody accounts for people, and then now with the digital age, they're having to play catch up. So again, I think this is a defensive move. I think this will be something where they they see the writing on the wall. And what I love about this is we're all in on crypto. As soon as my Chase Bank has its own wallet, I know for a fact that now we're going to have wallets all over the place. The next domino to fall would probably be Apple and Google having native apps in the phone for their own crypto wallets, and then it's game over. So inexorable march.
Yeah, it's definitely a defensive move. Again, having spent a lot of time in those kitchens, I can remember a while ago when the banks figured that there would be no way that payments could move away from them. We all know what's gone on in the payments industry, right? And so this is definitely a defensive move. We know that there's been a lot of investment on the custody transfer agency side from a bank perspective. And what's unique about it is the more complex the asset, you think of like CLOs and really complex assets, the more valuable it will be to obviously have all of that on digital rails and to be able to move it around and handle payments and transfers, with the universal or XZEL, right, is clearly an opportunity to try to maintain market share. I think it'll be to be seen whether or not it's effective. I think, great point by Adrian earlier. I don't know a lot of people under certain age who are opening traditional brokerage accounts or going through the bank in a traditional manner. And if this starts to impact retail, that could be where they actually have a unique edge when you start to think about the stuff MasterCard and other payments providers in the TradFi moving into DeFi sort of world have done. If they can combine all this and start to give you a better user experience through purchasing and transferring of money amongst friends and, frankly, obviously, internationally, it could have an effect. But I definitely see this as a defensive move. And I don't know if you can call it a defensive moat because I think the horse is out of the barn. But, I think that they're definitely trying to play a little catch up here.
Got a little bit of a sword of Damocles for sure. They don't do anything, they're screwed. If they do something, they open up the market to their competitors.
Yeah, the thing that I'm surprised by, and I haven't seen anyone talk about this yet, is it's interesting that this comes out right around the same time that Circle has been getting swarmed on acquisitions.
I don't think it's interesting. I think it's very much on purpose.
That's what I was inferring. I'm surprised that it's only Circle or it's only Coinbase and Ripple that are thinking about acquiring.
I don't think
Circle.
that it is. It's probably my guess is they've had quite a few offers from different banks. Maybe this consortium itself tried to buy them and they declined, or who knows? There's a lot of happenings behind the scenes.
That's right. So I think you and I are in agreement, Adrian. I pick my words intentionally, and so yeah. So I think that there's definitely some swirling currents underneath the waterline that are going on here. Marcus, I feel like you want to jump in there.
Well, I mean, so I have to be careful because I know some of the good folks still running some of these bank scenarios and speak to them pretty often. And I would just say I agree. I'm pretty sure that Circle's got other conversations in the mix, and we'll see how it shakes out. But obviously, Circle has a strong brand, and they're obviously going to command the right price. So that could also be a part of why we're seeing some of it out publicly and some of it remaining private.
Sure.
They're good operators. So I imagine.
Yeah, well, some of the numbers getting thrown around are pretty crazy. They were thinking about an IPO at that 4 or 5 billion range, and now we're in a bidding war, potentially in double digits and maybe even more.
I heard the last number I heard was like 20 billion.
Yeah,
I heard that. I'm skeptical that was cash or if that was equity, and marked up equities, things like that. But I don't know the details.
I have a dark horse candidate that I think would be a great acquirer of Circle, and I think
InvestReady.
I don't have that type of money. If I did, I would. Trust me.
LBO.
I would have been the first in line for sure. No, I think Apple would be an incredible. They have so much cash. They have Apple Pay. They're trying to get out of just being a hardware company, and they want to get into that financial space. You put Circle on Apple phones all over the place, you have a de facto worldwide coin.
I'm going to pick up on that conspiracy, Adrian. I mean, because again, having spent some time without getting myself in trouble, we know Apple is using digital rails on some of the supply chain finance internationally, right? So that would, and to your point, they have plenty of cash. You don't know if it's a mix of cash and stock and whatever else, but if there is a combination, it'd be hard to imagine that acquisition being directly into traditional banks, right? There's probably some new age play that could be at work here. But I like the idea of integrating that Circle, platform into international supply chain. That's probably if Apple were to be in the mix, I would imagine that's probably part of the strategy. So I love that.
Yeah, well, look, Apple Pay I think is one of the largest payment processors in the world as well. So it would make a lot of sense. That's an interesting one. Anything else on this one before we kick it off? We got 2 more articles to go, guys. So let's keep rolling. Another friend of the show, Tokeny, We love those guys. They've been grinders. I mean, they deserve their flowers because they have successfully facilitated an acquisition in the industry. Apex Group, who was a big investor for a long time, has now officially announced they will take over 100% control over the next 3 years of Tokeny. Tokeny obviously being a big issuance platform and a leader in tokenization, specifically in the EU and Europe. They also developed their own tokenization frameworks, and they've worked with many of the industry companies. I think we all know at least somebody from Tokeny if you've been here long enough. So really wanted to shout out their team. Shout out to Luke, shout out to Mathieu, and many of the great guys at Tokeny for making this happen and getting the acquisition done. Any thoughts there, gents?
Go ahead, Adrian.
Okay. Well, I had the pleasure of being on the phone with Mathieu yesterday. The team over at Tokeny, we've been working together on a few projects to expand their services out to the U.S. with a few clients, and those guys are unbelievable. They work so hard. They've been at this for so long. The T-Rex protocol is extremely interesting and really is a play to allow for the mix of securities and the requirements for those particular types of tokens while being on a public blockchain that allows for that interoperability and not having to jump hoops or bridge a bunch of tokens onto a specific chain for the transaction you're doing. So I think their ability to facilitate the future of tokenization on public blockchain is a huge reason why Apex jumped in. And again, it's another sign of the times, guys. This is now the time. We are seeing institutionals acquire and bring these things in. We're seeing the ideas that were put upon the last 2 or 3 years now actually coming to fruition. The underlying processes and infrastructure has been getting built out for the last few years while we've been kind of waiting for regulatory clarity and keeping our head underneath while the meteors start hitting down. But it looks like the skies have cleared and it's time to get out of the bunker and start planting and growing this thing in the daylight.
It's high quality M&A season, right? And I think that's the summary from my perspective. Shout out to Tokeny. Like you said, if you don't know Tokeny, you're not in the space. Same with Apex. I mean, Apex has, such a huge breadth of opportunity in the platform itself. It makes a lot of sense to see Apex, really gobble up Tokeny and then integrate it. We're a big fan of both, and we think that there's going to be some great use cases at MPact Capital. So we're excited. But I think most importantly, to Adrian's point, this is M&A season, but it's not just ones and twos. We're looking at real sustainable acquisitions, integrations, and hopefully, products that will continue to push the envelope.
All right, guys, that is a great set of headlines. We have one more to wrap up before we go, and that is to talk about InvestReady's news. InvestReady has announced that they are partnering with Trust NFT.io and launching the credit token. So, Adrian, could you talk a little bit about that before we wrap up the segment?
Man, speaking of coming back from a long time, as Kyle knows and a few other people know, we launched a credit token almost 3 years ago as a trial to kind of try out some sort of on-chain verification. There just wasn't enough there at the moment to even expand into it. Fast forward to now, we're at the cusp of being able to put all the compliance portion that you need to comply with Reg D 506C on chain. KYC, zero knowledge, the ability to whitelist a wallet, because the tokens that we provide for these credentials are non-transferable. Right now, the way a credit token works is you come in, you connect your wallet, we associate it with an email address. You then do your verification, which would be a KYC, usually through Plaid. And then what we do is issue a token to one of the L2s that we support at the moment, which is Base, Avalanche, Polygon, Optimism, and very soon Solana, to your wallet that you've connected. And that just basically says a credential. So it could be you're just a proof of humanity. Just say, hey, we've KYC'd this person. The wallet that is linked to this token is controlled by a human. It could be an attribute. We're going to have specific collections for attributes like 18 plus. U.S. resident, non-U.S. resident. So now you'll be able to whitelist for specific requirements for your your products. And then finally, the biggest one of all, for at least on my end, is the accredited investor verification on chain. We've been doing accredited investor verifications at scale since 2013. We work with Mercedes-Benz Financial Services, Invesco, and a lot of other large real estate and crypto platforms that are trying to do online securities compliance. And a credit token is going to be able to take that verification and put it on chain and with the ability to basically pre-KYC and pre-verify that someone's going to qualify for your investment. You can take them all the way through up until they put the money in, keep it in escrow, and then you use our API to get the actual underlying docs. It really speeds up the onboarding for lots of different processes. And I think a credit token in and of itself is focused on not just the accredited side, but really bringing in crypto and credentialing on chain. Trust NFT is a great partner. They've been working with us to integrate our verification process into theirs. And what they're doing is they're mainly going after institutional processes and institutional investors that mostly deal in ETH. So they're minting these tokens on ETH in a similar fashion that we are. We're using L2s and kind of going after a broader market with a credit token, not just the accredited investor side, but just in general proof of humanity. Like I said, restricted websites that require either 18 plus or 21 plus, US, non-US, male, female, dating potential. There's so many things that can be utilized that you can utilize this type of credentialing for, that it made sense for us to kind of make it into its own platform as opposed to us just putting our verifications on chain. That's why it's a different brand. That's why we're launching it as almost its own separate entity within InvestReady itself.
Well, congratulations, Adrian and Mark.
Kudos, Adrian. Yeah, look, we all know this is the missing link, right? And it's not just serving one part of the market or another, right? Having a way to credential humanity and then break down what that humanity credentialing is actually used for. That's a power play. So we're excited about being able to learn more on our end as well. But kudos, Adrian. It's a long time coming. Hopefully this thing really opens up the rest of the market. We need it.
Yeah, man. Yeah, it has been a while. So if anybody's interested in it, you can just go to accredittoken.com. That's ACCRIDITOKEN.com. I haven't been spelling it very much. But yeah,
it's spelled normally. Just spelled accredit.
Spell it normally. Yeah, spell it normally. 2 C's. That's it. Accredittoken.com.
And it's a credit token or is it a credit token?
Accredited token, no T.
Credit
One T.
token.
One T.
No, not 2 T's. That's my question.
Not a credit.
All right. Well, we got out there.
Listen.
With that, gentlemen, I really appreciate you being here. We're going to keep the show moving into the next segment, but it was a pleasure. Thank you for being on here today.
Shout out to Herwig. We missed you, brother.
Miss you, Herwig.
Later, Herwig. Thanks, Kyle. Appreciate it, Marcus.
All right. Well, what an amazing market movement segment. And I've got even better news for you. You're stuck with me for another 15 minutes, but I'm going to try to be efficient here. We have an amazing segment here with the Token Debrief. This is all the other headlines because you better believe there were more than just 6 things that came out over the last week. So to kick it off here, we've got Van Eck launching a blockchain asset venture fund on Avalanche. They are directly going to be investing in tokens, in safe notes, in equities, in everything going on in the industry, specifically focused on growing the Avalanche ecosystem. And it is specifically focused on RWA products. They say money market funds as well as other things will be included. This is managed by the Van Eck Digital Assets Alpha Fund, the DAAF, which is a 100 million plus assets under management fund that has been investing into liquid tokens specifically. And the focus is on the Avalanche ecosystem. So they are investing. If you don't know the Van Eck team, you better get in touch if you're fundraising. Next article is SocGen, building stablecoin ecosystem stuff on Ethereum. They are going to be launching their own stablecoin on ETH. This is kind of exactly what we talked about in the earlier segment about some of these firms thinking about maybe buying Circle. SocGen says we're doing it ourselves. Moving on, HSBC launching tokenized deposits with International. Along the exact same lines, you have another huge bank that is getting in on the stablecoin game. There is a difference between tokenized deposits and stablecoins. Often tokenized deposits sit more as a wholesale bank-to-bank style of solution versus a stablecoin being more about payments, more consumer-based products. So that's kind of, I think, generally how I look at it. I'm sure that they might define them slightly more nuanced than that. But I think both of these intentions are very similar, saying, look, this is too big to ignore. We need to build digital rails to facilitate payments. Keeping the conversation going, we've got BNP Paribas, which is a large firm investment bank. Their asset management division has natively tokenized money market funds on the All Funds platform. So BNP has actually been very active in the tokenization space and has been pretty forward focused on the technology themselves over the years. And this is what they say is their first cross-border digital asset transaction between Luxembourg and France. So this is based in the European industry. The move actually is using the 2024 Euro system wholesale CBDC to experiment with a lot of this stuff. But they actually issued a natively tokenized share class of an existing Luxembourg money market fund. And then they've been doing this. And they say the key feature lies on the on-chain order execution that's triggered by the fund's NAV receipt, which replaces the traditional batch processing, enabling faster, more efficient settlement. So I think this one is really interesting. Shout out to BNP Paribas. Moving into the next segment or section, we've got enhanced yields. We've got a couple of interesting products here. The first one coming from BounceBit. They actually are launching a double-digit yield product that's collateralized by the BITL fund, obviously the tokenized treasury that is issued by BlackRock. And this has an annualized return of over 24%. And so it's a strategy of having basis trading, put option selling, and BITL token yielding. So basically, from the way that I understand this, there may be a premium or discount associated with the BITL fund versus a traditional BlackRock treasury fund of the same structure, which allows them to capitalize on a slightly different spread between those products. On top of that, you can recollateralize your BITL product and then reinvest it into more treasuries to start juicing that yield as well. They think they can get up to 24% yield. They have a basis trade that they say gets about a 4.7% annualized yield with a 15% return where they sell put options and then get the yield from BITL, which is 4.25 as collateral. So I think this is a fascinating one as well. I love arbitrage. I love basis trades. I think this is a great way to get 24% on a U.S. Treasuries product, folks. Get it while it lasts. I doubt it'll last forever. IXS, the IX Swap decentralized structure, launches their BTC Real Yield product. This is an awesome one. IX Swap and their team InvestX are friends of the show. They're offering real yield powered by Bitcoin. And so this idea is that they can get 10% from treasuries. They then use Bitcoin as the collateral. So they're borrowing USD at 0%, buying Bitcoin and getting yield. It's an interesting product. I'd be interested to see what the exact yield is. I'm not sure if I'm going to be able to find that on their site at this point. But I think it's an interesting product to get the stable nature of a treasury product in the US and still get that upside exposure to Bitcoin. From a regulatory capacity, we have a lot of different jurisdictions getting involved, and this really is the power of the US administration being very bullish on crypto, as well as the rest of the world seeing an emerging opportunity. We have countries all over the place that are getting involved. This week, we've got the Qatar Financial Center prioritizing real estate tokenization. That's where they see the most activity and think it's very, very interesting. They are going to try to figure out exactly how to either create digital tokens representing the actual ownership of the real estate. This is more like an equity transaction. They also are considering how to convert that physical property into a token. And so I think this is interesting. This is more of an investment opportunity where they want to tokenize actually some towers within their urban center and then see what the buy side demand looks like for something like that. And so I think this is spot on. We then keep moving into Hong Kong. They passed a stablecoin bill trying to launch a licensure around their the issuers behind this stuff. I tend to agree with this, to be honest. I think the stablecoin issuers kind of do operate as pseudo banks, so it makes sense to have a license that requires them to do so. We're waiting on the Genius Act to do something here in the United States. Moving on to the next one, we have the city of Lugano, who they worked with the SIX exchange and the Swiss Digital Exchange to launch digital bonds. They are using a wholesale central bank digital currency. I think this is the same one from Europe, the Project Helvetia. And so they are going to be bringing a 2-year product, or it's a 2-year extension of the pilot of the CBDC. This is their 4th bond, and it's about $100 million Swiss francs. So it's certainly less than that in US dollars. It is a 7-year issuance on that product. So City of Lugano getting involved in this market. Finally, for our jurisdictional stuff, we have another real estate Middle Eastern announcement. This is the Dubai Land Department. They are actually bringing the land deeds, the deeds itself, the ownership documents of the property is coming onto the XRP ledger. So unlike what Qatar's financial center was focused on, the equity ownership of the property, this is more about registries than it is about actually investing in a real estate property. Still about ownership, but just in a different way. That's Dubai bringing land deeds to XRP. And to close out our show, we have one final section of just some other great news that you may have missed. Black Manta and SBI Digital Markets announced that they have a money market fund tokenization project that is now live. It's 21X Black Manta and SBI Digital Markets launching a tokenized treasury that is backed or collateralized by the UBS money market fund product. I think this is a traditional UBS money market fund that then shares that represent interest in that fund are tokenized. That's done by 21X and Black Manta in collaboration with SBI Digital Markets. But to keep it going, there's also another interesting one. This is Amber Premium and DigiFT. So DigiFT doing the tokenization, Amber Premium working with credit cards, allowing people to actually invest into stablecoin yield via tokenized treasury fund products, specifically treasury funds that have been tokenized by UBS and their in-house tokenization platform, which, as you might have guessed, it is called UBS Tokenized. So they've really been, they've gone with that kind of on-brand name, but UMint is their money market investment product that is tokenized, and Amber Premium and DigiFT are allowing people to invest in UBS's actual tokenized product via credit cards. This is pretty cool. And to keep going, we've got Ocean and Bricken partnering to on distribution of about $300 million of tokenized real world assets and across 16 countries. So the platform has asset creation tools, presumably like a token studio, as well as investor management and lifecycle processes and solutions for that. So that's really exciting. Ocean is built on the OP stack, which is Optimism. It's an Ethereum virtual machine compatible product. And the company behind Ocean, which is Clearpool, has done over $750 million of institutional lending, presumably on chain. And so they know this industry, and Ocean is just getting involved, presumably in the private credit space. So I think that that's very exciting. And finally, to end off a thick segment here on the Token Debrief, we have R3. R3, the company behind Corda, the institutional blockchain solution enterprise tech, has announced that they have connected and partnered with Solana's public mainnet. Presumably, this is for public blockchain integration and distribution. And they note this is a new strategic direction for R3, signaling its leadership in driving convergence of public and private networks. I think Always R3 was a very walled garden style of private network. Now they have changed their tune and are working with Solana. So shout out to R3. They've been in the industry for a long time, have worked very, very hard. And with that, ladies and gentlemen of the industry, that is all of the news that we were able to cover here on the Security Token Show. And with that, we're going to keep the show going into the next segment. All right. So here's the deal. The companies of the week. This is a segment where Herwig and I, but in this case, it is just me, pick companies that are the most impactful for the industry for a variety of reasons. It could be because they are the largest company that has gotten involved, or because they're deploying into the industry, or because they've raised capital, or because they've made some groundbreaking novel structure. We like to give them a shout out, but it also qualifies you for the Company of the Year award. That's where Herwig and I pick one company of all of the winners throughout the year as our yearly winner of the biggest moves in the industry. Generally, this often is a large industry stalwart, but you'd be surprised how quickly that can change. In just 1 year, a company can go from relative anonymity in this industry into winning Company of the Year. We've seen it before. We may see it again. So with that, my winner for episode 285 is none other than Kraken. I'm giving the winner to Kraken this week because of the fact that they are working with MPact on bringing tokenized stocks into their crypto exchange. I really hope that this drives momentum. I think that we have been waiting for a large institutional exchange to really take the dive. We wanted Gemini to do it when they acquired their ATS. We've been waiting for Coinbase to do it since they acquired their ATS. We've been hoping that Robinhood might do something in this space. But Kraken seems to be the one most likely to lead the charge here with bringing the X stocks product from MPact on Solana into their exchange ecosystem. I will be fascinated to see what the volume looks like, what the demand looks like for this, but hopefully it kind of really forces other companies in the space to do the same and get involved here. And with tokenized stocks, with private credit, with yield-bearing products, we will have a really interesting opportunity to drive this market forward. So with that, I love that Kraken has gotten involved in the space, and that is my winner for Company of the Week. And that is episode 285, an amazing conversation with some wonderful people at the beginning of the show. I've had a lot of fun, but I really do miss Herwig. So hopefully he'll be back for next week. I know I've missed the occasional show. I'm happy to be the one leading the charge here for episode 285. So with that, I wish you and bid you adieu. And as a final closing statement, happy tokenizing.